We've called for an investigation of the Fed, arguing that Jerome Powell has failed. Now, his defenders say the pandemic was a black swan event that sent the economy into a tailspin, and he has correctly read the labor market's ability to sustain full employment in the face of rate hikes. What do you say to those who disagree with you, and argue Powell, since of this unprecedented cataclysmic economic event of the pandemic, that he's actually done a decent job?
Well, you know, if you want to treat this as a cataclysmic event, which certainly the pandemic was, keep in mind it drove inflation in ways that are different from how we usually have it. So, for example, we have seen supply chain kinks that have driven up prices. Then add to that, we have a war in Ukraine. And then one of the big pieces has been a lot of price gouging. We've seen these giant corporations, particularly in industries that are very concentrated, really pushing their prices up. So there are three things that are helping push prices up. And do you know how many of those three can be affected by raising interest rates? None of them. The whole point is that Powell is using the one tool the Fed has, and that is raise interest rates. But he has said himself in hearings, nope, it won't affect any of those things. But here's what it will affect. When the Fed uses language like we're trying to cool the economy or slow down the economy, the translation behind that is we're trying to increase unemployment.
Right.
And in fact, the Fed has said this. In the last hearing that I had with Chair Powell, when we had him in front of us in the Finance Committee, I looked at the Fed's own predictions, their report in December, in which they said, we want to keep trying to slow down the economy, and what we're hoping for out of this is that we increase unemployment by 2 million jobs. Now, that's a lot of people for whom that's a lot of hurt. These are people right now who are paying the rent, putting groceries on the table.
Sure, they're not hiding this, though.
That's
I mean,
right.
they're saying this. He said it today. I think more than 1 million jobs to be lost this year because of these rate hikes.
That's right. And actually, by the Fed's own prediction, it's more than 2 million that is their target here. And the point I want to make is that's not going to help us on supply chain kinks, not going to help us on the war in Ukraine. It's not going to help us on these the price gouging from these big corporations. So I think we ought to be not doing the these extreme interest rate hikes. We've never seen hikes at this rate in the modern economy, and bearing down harder on these other costs that are these other factors that are driving up
But you
costs.
think Fed Chair Powell should be doing things about these other things that are causing?
No, I think what he should say,
Right.
he should call, for example, for more on price gouging, but back off using his tool and keep trying to say that he's going to keep using it until he puts 2 million people out of work.
So a December Washington Post column said that this is not the Warren presidency, but it's certainly a Warren-infused presidency, meaning that President Biden, is taking a lot of your suggestions and trying to enact them into law. Have you ever directly told President Biden that you think he should fire the chair, fire Jerome Powell, and who would you like to see replace him?
So I'm not going to talk about private conversations, but what I will say is I've made it very clear as publicly as humanly possible that I didn't think that he should be reconfirmed as chair of the Fed, and I think he's doing a really terrible job. And he's doing a terrible job on both fronts. Remember, there are only two jobs for the Federal Reserve Chair. One is monetary policy, inflation. I think he's doing a very bad job there, and it's risking pushing our economy into a recession. His other job is regulatory oversight, and he has spent 5 years weakening regulations over these multi-billion-dollar banks. I predicted 5 years ago the consequence of that kind of weakening would be that we would see these banks load up on risk, build their short-term profits, give themselves ginormous bonuses and big salaries, and then some of those banks will explode. And that is exactly what has happened on Chair Powell's watch.
You just mentioned the prospect of a recession. Do you think the United States is headed for a recession?
I think that is where Jerome Powell is trying to drive it. And he's got two different ways
You think he's purposely trying to drive it to a recession?
Well, what he's trying to do is get 2 million people laid off. And one of the things that we need to understand, he wants to raise the unemployment rate by more than a point within a single 12-month period. We have done that before in this country. In fact, we have done it 12 times before. And out of all 12 times, how many times has it resulted in a recession? The answer is 12. So that's the direction he's trying to push this. That is a danger to our economy. It's why I said 5 years ago, I think he's a dangerous man to have in this job.
So CNN has exclusively obtained a letter written by you and 6 other senators after the collapse of the Silicon Valley Bank. You're calling for the Fed to crack down on these large regional banks, arguing that they cannot be left to supervise themselves. As you know, Powell is not the only banking regulator. It's the OCC, the SEC, FINRA, the CFPB, which you know a little bit about,
Yeah.
the FDIC, Treasury. In short, the Biden administration. Are you pointing the finger too much at Powell and not enough at President Biden and all the agencies and departments that he's in charge of?
The one who is responsible on safety and soundness, that's the part we want to go here. Is this a financially solvent and stable bank? That's at the Fed for all of these $50 billion and above banks. And that's where it is that Jerome Powell has spent years now weakening the regulations. In fact, I had him at a hearing not long ago in which I talked about the fact that he has weakened the regulations over these banks, not once, not twice, but literally dozens of times. And so I said to him, of all the things you've done for these banks, and a lot of it's way down in the weeds, can you name just one where you kind of tightened the regulations a little bit, where you increased oversight a little bit? And his answer was no.
No. After the Silicon Valley Bank failure, you sent a letter to the former CEO of that bank arguing that his lobbying to weaken the rules, I don't know if you mean with Congress, which actually acquiesced
Yes.
in 2018, but also with Fed Chair Powell. But you said his lobbying is what enabled the collapse. And you asked him to submit answers to your questions by March 28th. It is not yet March 28th, I should note. Have you heard back, and what are you hoping to learn?
No, we have not. But this really is the reminder. This is not a story that just one day fell out of the sky. This is a story that starts back with, you remember, the last crash put Dodd-Frank in place, promised the American people we're going to have tough regulations, and that means we're not going to have any more bank failures. Then these multi-billion-dollar banks, including the CEO of this Silicon Valley Bank, come in and say, no, no, no. They want to be treated not like the multi-billion-dollar banks they are. They said, we're just like those little tiny local community banks that do such a great job of providing local loans and so on. So regulate us very lightly, they said, because they claimed they posed no risk to the economy. Now, Donald Trump then ran for president saying to those banks,
Right.
multi-billion-dollar banks, I will lighten regulations on you. Once he was elected, he put in regulators who believed in deregulation. Then he went to Congress and said to Congress, roll back the part of Dodd-Frank that requires more supervision over these $50 billion and above
And most
banks.
Republicans went along with it, but
All of
also a
them.
bunch of Democrats too.
Yep,
Also a bunch of
yep.
Democrats
No,
too.
he got help from both parties. And then what happened is that Jerome Powell said, you've opened the door for much more deregulation, massive deregulation. And he said it. He's actually on the record saying this. Because you opened the door, I am now going to go full steam ahead and lighten the regulations. And then his then vice chair, who was Randy Quarles, said that his job was to change the culture at the Fed in order to let these banks do what they wanted to do, to be able to take on risk, run up profits, and I'm going to say he didn't add this part, and run the risk of exploding.
Do you want other parts of the Biden administration to be more aggressive on these issues? All of the Treasury Department and all of the other agencies and regulatory departments that I mentioned,
Look,
do they need to be more aggressive as well?
I think right now this really is at the Fed, and then I want to say the regional Feds, so the whole Fed structure. The CFPB, for example, they're dealing with consumer contracts, and that's not the heart of what's gone wrong here. FDIC is trying to figure out how to manage the insurance for depositors. And actually, I think this is a place, thanks to the intervention that the Treasury was forced to take weekend before last, I think this is a place now we're going to have statutory change because, in effect, the Treasury, combined with the Fed, has said we're going to come in and start backstopping all deposits, backstopping the banks. And that means they're providing, in effect, a form of insurance and not charging for it.
Is there a way? We saw some elements after the East Palestine, Ohio train derailment travesty, where we saw some elements of the populist right, the J.D. Vances of the world, joining with some elements of the populist left, the Sherrod Browns of the world. Is there an area here for the kind of actions you're talking about that conservatives could join with you?
I think there is. And it's the reminder that there are regulations that are helpful to all of us. And the regulations are about safety. That's what obviously the train derailment was about. It's also about economic safety. We need a Federal Reserve that is doing its job, and that is to keep these banks safe. Look, no depositor, no small business, no family individual should have to say, I need to see the bank's balance sheet before I know that it's safe to put money in a bank. The whole idea is the regulators are supposed to keep those banks safe. You know, I used to talk about exploding toasters, that you shouldn't have to be an expert on toasters to buy a toaster.
Yeah.
We ought to know that they're safe. That's what regulations are about. Same thing ought to be true about putting money in banks. It should be safe. Banking should not be a place for risk takers who want to build up, fast profits. Silicon Valley Bank increased their profitability by 40% in the last 3 years. That's not what we want from banks. We want banks that are boring and that are safe.